Today, I'm going to be showing you exactly how you can find 100% APR passive income opportunities in decentralized finance, so that way you can combat cryptocurrency inflation and stack your bags for this bull run. And the software that we are going to be using in today's video is Metrix Finance. You just simply type in metrix.finance and it'll pull up right over here. Metrix Finance is an all-in-one research and analytic tool for decentralized finance positions. When we dive into Discover, we will be greeted with a list of opportunities that we could deposit into, but obviously there's a lot here and we need to start to filter them down because Metrix Finance is just aggregating that data into a fancy dashboard for us. In all honesty, it makes it a lot easier to understand because there's some different key performance indicators that you typically do not see on the decentralized exchanges directly. But diving into actually finding the positions themselves, the first thing that we're going to start off with on Metrix Finance Discover is by selecting the exchanges that we want to browse across. Now, being new to this industry, you might not know which ones to select. So my personal rule of thumb is to go with Uniswap as well as PancakeSwap, and of course Orca and Radium. And then from there we'll move on to selecting our different networks, which will select Ethereum, Arbitrum, Polygon, Base, BNB Chain, and Solana. Now if you want to make it a little bit more simple your first go around, then you can turn off BNB Chain and PancakeSwap. And that will kind of narrow down these opportunities, but there are still 1,392 different liquidity pools to sort through over here. So we're pretty lucky that Metrix Finance lets us filter by different assets in the pool, the fees APR, price volatility, TVL, and so on and so forth on this page basically. So what I'm personally going to do is set the fees APR to be higher than 30% and then lower than 500%. The reason why I do lower than 500% is because a lot of the times meme coins are going to pop up at 500, 550, 700, 1000%. And I personally just want to avoid all of those together. I don't want to even bother depositing into them because I know that I am going to end up getting wrecked because I take a more passive approach and I'm truly trying to maximize the income on my current cryptocurrency assets, and I'm not looking for brand new meme coins to dive into that I'm not holding in my portfolio. Now when it comes to the TVL, I will set this to higher than $500,000. In most cases I will do above $1 million, but since we are looking on the Solana network, we will do higher than $500,000 because a lot of the pools over on the Solana network do have lower amounts of TVL. And then from here we still have 476 different pools. So I'm going to start to type in some blue chip assets because my personal rule of thumb is to pair smaller market cap assets or just non-blue chip assets with blue chip assets. So if I type in right over here ETH, BTC, as well as SOL, I will be able to find opportunities that have one of these assets in them, which is 399 different liquidity pools still. That's still a lot to sort through. So the next thing that I do is go over to this 24-hour fee to TVL ratio. And the thing is, since the market is constantly changing, I cannot just give you a flat out number, right? Because if I give you that flat out number, it is not going to work for tomorrow, or it might not work in a week. It might be higher, it might be lower, because the market is constantly changing. So rather than that, I like to sort by the highest, right? And look at the ones with the highest fee to TVL ratio. And then I scroll down to the middle page basically. So I'm going to put say 20 on a page, and then we have 20 different pages. I'm just going to go over to page 10 basically, and I'm going to cut this list right in half, right? Find the middle point of page 10. It's about 0.046. So we'll just do 0.045, and we're going to look at higher than 0.045. And essentially that's going to show us liquidity pools that have a higher fee to TVL ratio of 0.045. Now, what exactly is the fee to TVL ratio? Well, it's a good metric for seeing which pools have high fees compared to the overall liquidity that they have. So for example, if we were to dive into this random USDBC to Ethereum pool right over here, this has an average daily fee amount of $1,480 in fees, but it has $3.17 million in TVL. So when we do the math of 1,480 divided by 3.17 million, it comes out to that fee to TVL ratio of roughly 0.0467%. Now, what I really want you to pay attention to when browsing through these 194 different pools is the actual assets that these pools are comprised of. And that's ultimately what we are doing here. We are not going and looking at really any of these numbers quite yet. We are primarily looking at the assets. Now, if you are already in Sol and you're like, oh, Sol USDC sounds great, only bookmark one of them. Do not go and bookmark all of them because we will run a back test later on to see if we are in the best possible solution for Sol to USDC. But anyways, I'm going to start by bookmarking the top one, of course. And then I'm going to move on and just keep on going down this list and find assets that I've personally heard of before that I don't mind taking on more exposure to. There's HNT to Sol. Now, if I haven't heard of HNT, I will go over to CoinGecko. I'll type in HNT over on CoinGecko and just browse what's happening to HNT. Is it actually doing good? Is it in line with the market? We look at the past 3 months for HNT, and then if we go over the past 3 months for Sol, I imagine there's a little bit of divergence right here. You can see Sol's been growing and HNT has been doing quite the opposite. So I'm personally not going to want to deploy into this one because they are not correlated whatsoever. And it also has a $1.1 billion market cap, but only $22 million in 24-hour trading volume. But let's just say I did want to learn more about H&T. I could pull up their website right here on CoinGecko and learn more about what this token actually is. I know I've heard of Render before, and I know that Render is a solid asset, so I'm going to go ahead and bookmark that as well. I've heard of Jupe before, so I'm also going to bookmark that. Now, if you guys haven't heard of these assets, I will give you a really good rule of thumb. If you see a picture of a dog as the profile picture or just the icon, I would probably just skip right past it. And the reason why is because that's going to be a meme coin a lot of the times, or something that looks somewhat animated, looks like a cartoon character. Those are most likely to be meme coins. Whereas when you look at something like the Jupiter logo, it's all about branding. At the end of the day, it's business, right? This is not a meme coin because it's branding. It's showing the planet of Jupiter, basically. And if we look at Render, once again, if we take a look at the icon, it does not look like a meme coin, but rather it looks like an actual utility asset. So it's all branding at the end of the day. Does it have good branding that portrays itself as a high quality asset, or does it have meme branding? And I have seen meme coins with utility. I'm not saying that they don't have utility. I'm saying most don't, basically. And a lot of the times, from my personal experience, you want to avoid them in liquidity pools. And obviously, that's for getting started. We have members that allocate smaller portions of their portfolio to meme coins. They do great, but they're smaller portions because they're taking huge risk. You'll see that we have more Render Sol, more USDC Sol. We're just going to skip past those for now. We want to bookmark essentially the first ones that we come across, and we will always do a back test to see if we're in the best one a little bit later on. I see Ethereum to USDC, so I'm going to bookmark that as well. Seems to be doing great. See Sol to Camino, and we'll just keep on going down this list and doing the same thing. I'm already on page 3. It's only been a couple minutes. You can go through a couple different pages. 200 pools. Seems like a bad deal, but it is not that bad. Now, that being said, after we've bookmarked a couple different pools, we can head over to the favorite pools section. And I do want to mention, if you guys are struggling to find different pools and start to sort through these, we do have a community called DeFi Excel where we teach you everything you need to know about getting started within decentralized finance. The truth is, you're missing out on APRs of 50 to 150% if you are not deployed into DeFi positions. And the thing is, if you go at this on your own, 80% of people actually quit within their first 3 months. And the reason why is because it's just so complicated. They don't have the right tools, education, and resources at their fingertips. And that's exactly what DeFi Excel provides you with, and it helps you become profitable, confident, as well as successful in the DeFi industry. We've built a clear and structured approach to DeFi mastery. We start with the big 4, which is understanding blockchain, crypto, smart contracts, and DeFi. We dive into the fundamentals of DeFi. We get you onboarded and help you inject capital fee-free, as well as we help you actually build out your portfolio and provide you with resources to manage your portfolio. Now, DeFi Excel starts at $47 per month for the lowest tier, and there are 3 different tiers out there, but we always recommend you start with the first tier and then from there upgrade if you need more support or if you're looking for a little bit more value. All the information for DeFi Excel is going to be right below this video if you guys want to check it out, but I'm going to dive right back into Metrix Finance and start to simulate these positions, right? Now that we've found them, we found the high level information of them by just looking through the Discover page. We want to start to simulate them. Simulate them is where things get a little bit trickier because now we're looking at a lot more data. I'm going to dive into Sol Render. I'm going to put in a deposit amount of $10,000, which, by the way, you want to put in what you would end up depositing into this pool. And of course, always scaling. Don't deploy all your capital at once. It's one of the primary things that we talk about in DeFi Excel. Start small and build up as you get more and more confident, and don't do too big of increments, right? If you do too big of increments, it's going to blow up on you because the psychology of managing a $20,000 position versus managing a $100,000 position, very different. And also, just to mention, you do not have to have high amounts of capital to join DeFi Excel or to even deploy into DeFi. It's completely up to you. You can do any amount of capital. Anyways, with Sol to Render, what I'm going to do is toggle this pair. The reason why is because I like to look at whole numbers, not decimals like this, right? It's the same exact pool. We're just looking at different pricing terms because in this instance, we're not looking at the dollar price of Solana. We're not looking at the dollar price of Render. We're looking at how many Render tokens equal 1 Solana. So as this chart is going down, that tells us Render is doing better because it's taking less Render to equal 1 Solana. As it's going up, like over here is slightly going up, Solana was doing better than Render because it's taking more Render tokens to equal 1 Solana. Now in this instance, we need to select our range because range is everything in your liquidity positions. If I just put this at the 30-day high and 30-day low, right? This is a decent range size, but I would almost be out of range on the bottom. I actually have like 97% Solana weighted in this position if I were to deploy. I don't want to do that, right? We're pretty far from this top range, so I'm just going to bring that down to something like right over here, a recent high that we've seen. And I'm going to snap that to about 36.2. And then I'm going to bring my min price down until I get about 55% render or 60% render, either or. I'm primarily looking at the asset ratios. The reason why is because render is doing better than Sol. I want to have more of it in my actual position. So if we dive into what that range looks like now, you can see that looks pretty good, right? That pink line, which is the current price, is right smack in the middle. And we have a range of basically 19 to 36, let's just say. That's going to get us 55, nearly 56% render, and about 44% Sol. And additionally, we're looking at an APR of 74%. But the thing is, there are two different things that we need to do to make sure that this APR is accurate, because Metrix Finance is composable. Just like at DeFi Excel, we teach you how to be independent. We want you to be able to do this on your own, have advanced tools, but obviously that comes with a little bit more deeper of a learning curve, because we're not just giving you something to cut and paste and say, hey, this works, when it really doesn't, right? We're giving you the tools and resources you need to learn this on your own. The first thing I'm going to do is look over here at liquidity distribution. Now, this is all after I'm happy with the range that I found. Liquidity distribution, I want to make sure that the current price is near the top of liquidity distribution. If it is not, I will manually adjust it to be at the top. Now, in this instance, when I manually adjust it, you'll notice that my SOL and render ratios are going to change. This is strictly for simulation purposes. When we deposit, we are going to deposit at the actual price, because that's the actual price. We are going to deposit at the ratios initially shown. But when we are simulating, we want to see how it's going to perform when there is more liquidity in the market. So we want to adjust at the peak of liquidity distribution. As you can see at this peak, there's about $50,000 of liquidity, whereas on our current price, there's about $44,000 of liquidity. So now that I've adjusted that current price to be at the very peak of liquidity distribution, I'm going to scroll down to the volume history. And I'm going to take a look at this over the past 30 days and say, what's happened here? Well, what happened here was the volume started off low. It started to slowly pick up, like in this period. And then from there, it shot up, right? Shot up November 10th, November 11th, and then it went down. And we've seen these big days since, but it's slowly trending down. If we were to draw a line on this right now, it would look something like this, where we basically have a downward slope, and it kind of looks like a little ramp, basically. That's what's happening. That's the trend line of this volume, basically. So what I want to do is I want to factor in everything since November 14th, because we have high days, we have our low days, and we have a couple low days over here, but we're not factoring in these super high days that we're really not hitting anymore. So if I factor in since November 10th, that would be about 19 days right over there. So if I factor in since November 14th, that's going to be about 15 days, and we'll scroll down. Yep, that looks accurate. We are doing consistent volume. Another way that you can tell is by looking at recent volume and seeing, okay, we're doing about $4 million a day over here. And then obviously on like Thanksgiving, lower volume. So like $3 million in a day, but that's fine. We won't factor that in because that's Thanksgiving. It's a holiday, not as much trading activity, but $4.4 million on an average day. And our average is $4.4 million, which is great. That means that we are close to what the overall average for this period is. So now that I've done that, I am going to get an accurate depiction of what that APR may look like. And it's showing 81%, which is a little bit different than what we initially looked at, but that's an accurate depiction of what we might do in Sol to Render. Now, the thing is, there are other Sol to Render pools, so we can head over to Simulate, and we can go over here to this tool called Pair. Pair is the bread and butter of Metrix Finance, and a lot of things are the bread and butter of Metrix Finance, but we'll select Orca and Radium, and then the Solana network. And that's because we are looking for Sol Render. That is only going to be on Orca and Radium, which are only on the Solana network. And just like that, we will now go and we will select Sol, and then we will select Render as our token 1 and token 2. And we'll then type in our deposit amount. We will type in our calculation range, which we chose at roughly 15 days. Now, obviously, when we are typing in this calculation range, we have to bear in mind that some pools might have a little bit higher volume, and we might have to adjust that calculation range. But that's once we dive into actual simulation. Same exact thing goes with the current price. I'm just not going to touch the current price over here. And then from there, I'm going to select our range of 19 to 36. So I'll go back over here, type in 19, and also type in 36. And now that we've done that, I hit the search button. That's going to find all the Sol to Render pools on Orca and Radium for me. We have two positions that pop up over here. The first one that we looked at right here. And since there's only one other, we might as well dive into this one as well. So we'll hit Simulate, open it in a new tab. And then from there, we're going to dive into the liquidity distribution. Make sure it is at the peak of liquidity distribution. And we'll just slightly adjust that right over there. And now it's doing about 66% APR. And then we will look over here at the volume history. I'm going to zoom out to 30 days first and see, okay, it's about the same situation. So we're going to look at that 15-day volume history basically. And just like that, doing 66% over here, but on the initial one, we're doing about an 81% APR. So we would want to end up deploying into this initial one right over here. Now this one is an 81% APR. It is not a 100% APR position. With that being said, there are plenty of other 100% APR positions over here, but I want to show you what I would do if I wanted to get a higher return on this one. I would zoom back out to 30 days, right? And this is a broader range. And this is personally something that I would deploy into if I was looking to spend maybe 30 minutes per week managing this. And I'm probably going to end up rebalancing every 2 weeks or so in a position like this. It's something that's more passive as opposed to active. But if we wanted to get a higher APR on this position, we could bring down that max price to something like 34. Just bring it down ever so slightly. And then from there, adjust our min price accordingly until we get back to about 55% render. And we could put that at roughly 21, let's just say. So if we do 21 to 34, 4, and then we look at a 15-day time frame, we are doing roughly a 105% APR in this position. This is a choice on whether we want to manage it more often or less often. In this instance, to get above that 100% APR, we need to manage it just a little bit more often. But stuff like sold USDC, this is doing a really good APR without having to manage it nearly as often. If we were to deploy $10,000 in something like sold USDC, no need to adjust liquidity distribution because it's already at the peak over there. And as far as our range goes, that thing is pretty broad, so we will adjust that to something like 220 on our bottom, and then we will do roughly 280 on our top. It's always good to start with a little bit more sold, something like sold USDC. That's showing a 416% APR, but if we take a look over at the volume history, that thing is declining. So if we were to just look at, like, let's just say a week, right? We're still doing 186% APR. If we were to look at 5 days, 157% APR. Even 1 day is doing 95% APR, and that's using Thanksgiving volume, which is very low. So it's important to realize that there are plenty of opportunities out there. Some will hit your benchmark, others won't. Others you can adjust to hit your benchmark. You just have to be aware of the extra management that you'll put in. Guys, if you enjoyed today's video, make sure to drop a like and subscribe and notifications turned on. In my next video, I'm going to be covering a bunch of information about actually building the portfolio and putting these little pieces together that you've learned on the YouTube channel. And if you guys are looking for some support when it comes to building out your DeFi portfolio, I highly recommend you check out DeFi Excel, which will be right below this video. I'll see you guys in the next one, and peace out.